Stocks rallied today. Gold took a breather, but one of our traders is betting that bullion is about to break out big time. He's got a way to play it. Guy Adami's taking the mound for a fast pitch. Guy, take it away.
Well, as I mentioned earlier, I found myself watching the 60 Minutes last evening with Fed Chair Jerome Powell, and hopefully most people were as aghast as I was. But, you know, when he basically said, yeah, we're just digitally creating money, I mean, that tells you all you need to know in terms of what's going on in gold. So the money reserve, you know, the money, M1 money supply continues to go through the roof, number one, and that doesn't show any signs of abating. Number two, I mean, physical gold, there is a now premium for it. If you look out there and see what's happening, people are tripping over themselves to get the actual physical commodity. And the reason why I think GDX is your play is because how levered these gold miners are to the price of the underlying commodity. Now, GDX is 1/3 basically Newmont Mining and Barrick, but you got a little Kinross in there. You got a couple other smaller mines. So if you don't want to play the individual names, I think, and I'm usually reticent to pitch an ETF, but in this case, I think GDX works. And this is an environment where if you've been waiting for gold, it doesn't get much better than this, Mel.
All right. Well, this, as Fast Money viewers know, is usually the point of the fast pitch where we open the floor to traders who can weigh in or ask a question. But in a Fast Money First, we're going to kick things over to the chart master to break down where he sees the gold headed. So, Cornerstone Macro's Carter Worth joins us. Carter, take it away.
You bet. Hi, team. Well, aghast is the word. That's right. What you're hearing from your federal authorities is ghastly, and you want to own gold, you want to own miners. Let's look at a couple charts, 3 in total. The first is just actually the point that Guy is making. This is a comparative chart of the metal versus the Philadelphia Gold and Silver Mining Index going back to its inception in 1982. And what you can see there is the spread, right? We know that gold is getting back to its all-time high, whereas the miners have lagged. They're still operating companies, and they have to struggle with so many things. But if you want leverage, this is where you want to do it, and that's the point about GDX. You play this through GDX. The second chart is just the simple chart of bullion. Now, this goes back to the lows in 2000, 2001, which you can see very clearly. Bullion was trading at basically $250 an ounce, plus or minus, 255, and it peaked in 2011 in the summer at 1924. And then it gives back half, and we've basically been climbing back since 2015, as all will know, and we are now sitting here at 1735 plus minus. It's just, if I would use a word, inevitable that we are going to approach those highs, and ultimately exceed those highs. But finally, just a here and now chart. Take a look at the final chart. It's the 6-month chart of gold bullion, and today's weakness simply brought you right down to that minor trend line. And this, I think, will end up being yet another chance for those who are not involved to get involved. Days like this, when there's weakness, keep adding to longs or get long for the first time.
All right, Carter, thank you. Carter Braxton Worth joining us. So the man who sits atop the pantheon of technical analysts essentially backs Guy's pitch for GDX. So we ask the traders now, buying or selling Guy's fast pitch for GDX? Tim Seymour, what do you say?
You know, Guy, I'm sorry. I believe in gold, but I don't believe in the GDX here. So I'm afraid I think investors will be chasing this one. And this is not Guy with a mustache. This is actually Guy frowning. And those are actually teardrops, not tattoos. So I'm a seller, Guy.
I was going to say the stash looks not bad on Guy. Brian Kelly?
Now, it looks like more stash. Sorry.
Buy or sell GDX?
You know, for me, it's a buy. I like it. I'm long gold, but I got this little emoji guy here, which is kind of, I don't know, because my concern is exactly what Carter brought up. Their operating expenses. I expect their labor costs are going to go up, and with oil rising, that's a big input to them. So I'd rather buy gold, but, you know, GDX isn't bad.
Oh, look, Carter's back. We brought back the guest. Dan Nathan, what do you say?
All right.
Yeah, so listen, you guys know I buy Guy all the time, and I certainly buy Carter. You know, I think Carter said something interesting about the GDX here. I think on a pullback to that breakout level near 30 looks like a great level to reload on the long side. You go back and look at the past crises. This thing had much higher highs. I get the point about input costs, but from a technical setup, this thing looks like a decent buy on a pullback toward the low 30s.